Hello and welcome to the 16th lecture of the course Forex in 3 steps. Today we will be talking about the daily movement of currency pairs in Forex. Previously we have covered MetaTrader 5, the trading platform, and we have covered the types of orders and how to trade professionally on a trading platform. And now it's time to move to more technical things like the daily movement of currency pairs in Forex. Let's hop straight into it. Let's first talk about Forex session timings. There are 4 main Forex session times that you need to be well aware of. Forex timings are important because of 3 things. Firstly, they help you identify the volatility of the market, and it is always the best to trade during volatile times and during when the market is active and moving well. Second thing is Forex session timings are important because they allow you to see sessions liquidity, and we will explain this later on more deeply when we cover technical analysis and liquidity. And the third thing is session. When you know which session is active and which session is open, which is closed, you will be able to identify the best pairs to trade at the moment. So for example, here when Sydney is open, Sydney session is open, which is in Australia. It is open from if we use the GMT plus 3, it's open from 12 a.m. to 9 a.m. The best pairs to trade at the moment are AUD USD and NZD USD, because these are the ones related to this session. Second session we have is Tokyo, and by the way, Sydney and Tokyo are sometimes combined together and called Asia session. So if you hear Asia session, it's more popular than Tokyo and Sydney. It's basically Sydney and Tokyo sessions combined together. Okay. And second session is Tokyo. It's from 2 a.m. to 11 a.m. GMT plus 3, and the best pairs are the ones that include JPY. So for example, USD slash JPY, Euro against the JPY, and AUD against the JPY. Anything that's related to the JPY is the best time to trade it is during these times, because Tokyo session is open and Tokyo is in Japan. That's why it is the best time to trade the JPY pair. Third thing is London session. London session is one of the most popular sessions, and it also has a good volume and good volatility, because the London session, when it opens, many traders like trading the London session, and therefore the markets move much more quicker than they move during Asia session, which is Tokyo and Sydney. And the London session is open from 10 a.m. to 7 p.m. and of course you will find that the London session, the best pairs to trade are the ones that include GBP and as well the Euro. So for example, GBP against the USD, Euro against the USD, and Euro against GBP are the best to trade during London session. And that doesn't mean you can't trade the Euro USD during New York. No, it's a very popular currency pair, the Euro USD. You can trade it at any time, but the best times to trade in any financial market is usually London and New York session. Tokyo and Sydney, which is again Asia session, is more slow, and the activity and the trading volume is usually much lower than during these 2 sessions, which is why many traders avoid trading in Sydney and Tokyo, because of the low volume and the low trading activity. And the last session is the New York session. New York session opens from 3 p.m. to 12 a.m. and of course, since New York is in US, then any pair against the USD, you will find it very volatile during New York. And New York is definitely the most volatile and the most aggressive Forex session. As soon as it opens, you'll definitely find movements and aggressive movements, and therefore some people even avoid trading in all of these sessions in London, Tokyo and Sydney, and they only trade New York. But it all depends on your strategy and it all depends on your statistics and what results you found while backtesting your strategy. Some people find success in London only, some people find success in New York, some people find success in combining both these sessions and trading while both are open. So for example, some people like to trade from 3 p.m. as soon as New York starts until 7 p.m. before London closes. So both sessions are active and both sessions are causing volatility and lots of trading activity and volume, and therefore some people like that. You will know which one is better and what your preference is as soon as you start backtesting and practicing and seeing the results in which session. So when does the market volatility increase? It increases during natural disasters, economic crisis, war, statements from influential people. As you all know, for example, when Elon Musk tweets about a cryptocurrency coin or anything, then you will find lots of movement. And for example, Trump as well. Trump, as soon as he tweets or talks about anything during a press conference, you will find market movement in a very volatile way. And again, London and New York session openings, they always cause volatility and to increase, and also during news releases and economic indicators like the FOMC and like the CPIs and all of these economic events. So how can we predict price movement? We can profit from the Forex market if our predictions about price movement are correct. There are two ways you can analyze. Some people like this way, some people like that way, some people combine both. We will cover both of them in this course. Do not worry, you will be able to do fundamental analysis and technical analysis. You can combine them or use one separately, up to you. So what is fundamental analysis? Fundamental analysis is studying economic indicators and studying politics and studying predictions of crises and wars. So it's basically analyzing the markets and predicting and forecasting the markets by studying the economy, by studying politics, and by studying news. This is definitely the older method of analyzing, but it will never get old because no matter what happens, the markets are always moving and adapting and adjusting depending on what's happening in the world. The other type of analysis is the technical analysis. This is the more modern type of analysis. Technical analysis has a much more variety. You will find thousands or even millions of strategies inside technical analysis, and it is basically studying past price movements to predict the future. It is studying chart patterns, it's also studying different analysis schools, and it's also studying technical indicators. The debate about which analysis technique is better has always been there since technical analysis was created. But in my honest opinion, I think the best thing you can do is combine a little bit of this and a little bit of that, and combine both types of techniques and analyze through them. But if your preference is technical analysis, then by all means study technical analysis. You do not need fundamental analysis. If you like technical analysis, you can only study technical analysis, and you can be very profitable by only technically analyzing the charts. And you can also be very profitable by only studying fundamental analysis. So the case is up to you. There is not one that's better than the other. Both are good. It all depends on your preference and what you like and enjoy the most. And that is it for this lecture. See you in the next lecture.